Well, good morning, everyone, and welcome back to our daily trading room, first trading room of the new year. I hope everyone had a very nice holiday break. Speaking of breaking, I pretty much decimated all my New Year's resolutions already. I think there might be one or two still hanging on, but for the most part, yeah, New Year's resolutions were made to be broken, right? I see there's a few new people in the room here this morning. Welcome. And let me give you a quick overview of what you're looking at here. What we've got is the diversified trading system along with the Raptor. So the way I have my charts organized, I've got the Hawk Micro Scalper here in the top left, the Falcon Swing Trader on the top right, Eagle Trend Trader bottom left, and the Raptor here on the bottom right. I'm following the NASDAQ on this monitor. That's the NQ. I'm also following the Eurodollar and crude oil on my other monitor, but please don't be shy about requesting markets, or if you have any questions, please feel free to ask. So it looks like we're off to a little bit of a bullish start here this morning. I gotta remember how to do this. It feels like I'm out of practice. Well, I am out of practice. I'm not gonna rush into anything, I don't think, right out of the gate. Even though we do have some decent signals to start the morning for those of you who like that first in-sync eagle signal. Well, there you go. It's right there. That's the buy signal a few minutes after the open or on the open. Nope, a couple minutes past. All right. So the eagle trading into the hard edge of the trading band, coming out with a buy signal. That is a doable buy signal, by the way. And we would be looking for the market to re-challenge the highs. Obviously, it does appear as though the market is in an uptrend. Here on the Falcon, we got the late filter entry signal, the Hawk, a first micro macro cross, and last but not least, the Raptor also producing the first in sync signal right there. So a little bit of bullishness early in the market. And so far, some half decent follow through to start the day. All right, a little bit of a flinch now as we get closer to the overnight highs. So the market topping out looks like around 66.75, and we're getting a little bit of selling pressure, which I suppose is what we would expect. Richard seems to be having some audio problems. Am I coming through okay? Can somebody give me a sound check, please? Yeah, okay, good, thank you. I'll just let Richard know here. So what I would be looking for here on the the Raptor now is ideally a little bit of a pullback, perhaps a hard edge bounce. That would be our number 3 signal. The clouds have crossed. They kind of got jumbled up here and they've uncrossed again. So the next signal that prints is probably going to be a number 1 signal. That's the cloud crossover signal. So that would be a viable signal as well. Might get a hawk signal here. Looking at a possible macro pullback signal. The Falcon retreating now to the trend line, so it's also producing warning dots. That would be what we call the trend line touch signal, just a basic continuation signal. All right, back to the hard edge now. Actually, starting to look a little bit more bearish now, isn't it? The Falcon here already changing the trend line color. The hawk giving us a possible red bar buy signal. Now, these types of signals tend to develop near the end of a trend, so you should trade them with a grain of salt. I might throw a single on here. Pretty much, oh, there goes the signal anyways. I was going to say you need to cover it fairly deep because what you're looking at is a possible trend change in the making. But right now, yeah, there's a little bit of a struggle going on. We'll see whether or not the buyers are prepared to follow through. The hawk early bearish here with a first micro macro cross lower. The Falcon working a possible trend change signal. Nothing there yet. I'm still waiting for the Raptor here to come through with that hard edge bounce. Looking for a possible buy signal here on the Raptor. You can wait to set up, or you can just get ready on your buy market button. There it is. So this is, well, they're calling it, the programming's calling it a cloud crossover signal. It's also a hard edge bounce. And essentially what we're looking for here now is for the buyers to take out this high. If they fail, of course, well, the market's likely to reverse and head a little bit lower. But the fact that the buyers held the hard edge of the trading band tells me that they're at least going to give it a go. Come on. All right, while this is working its way out, Scott's got a question here on the Eagle. Scott writes, good morning, Eric. Well, good morning, Scott. Hey, on the Eagle 3 signal, do the 3 count if there is, say, 2 long, then 1 short, then the 3rd long? All right, I think what you're referring to is the rule of 3 signal, which is the counter trend signal in the Eagle. As with all counter trend signals, you first have to have a trend, which we do here in the Eagle. And then we need to have what we call a test of the extreme. In this case, the extreme is the high. There's the test, and then we would look for a failure that the market is going to start heading the other direction. When this starts to happen, the Eagle tends to start printing signals on the opposite side of the trading band. So we've got a bullish band, but we start producing sell signals. Typically, after the 3rd sell signal, the market will try to reverse and head the other way, especially if we've had a test of the extreme, as we have here. So I think what Scott's asking is, does it matter if there's buy signals intermixed with the rule of 3? And no, it does not. It does not matter if you get buy signals cropping up here. A rule of 3 signal, though, because it's a counter trend signal, is not a signal that I would rush into. And by that, I mean I would probably use, you are correct that this is, technically speaking, is a rule of 3. But rather than take the signal right on the hash mark, I might look at perhaps using a second push entry, namely letting the signal bar engage and then see where the market flinches. Or if it's not too far away, enter below the swing low. Now in this case, the swing low is far away, so you would be better off trying to short from here. But you know, if this swing low was only a couple of ticks away, well, then I would offer up a couple extra ticks to enter on the other side of the swing low. And the only reason I do that is I would be looking for some increased momentum to bring me into the trade. I think we've got a pretty strong uptrending market, though, which is another reason you don't want to be too aggressive on the short side. Goodness knows I was looking for a major correction over the Christmas period, and boy, was I wrong about that. Here is a daily chart of the NASDAQ, and we did see a correction, hardly a major correction. and then the market just going all out again to the long side. So whenever you consult a longer term chart, and this is actually a good practice, folks. So you take a look at your long-term chart. What's the trend? Is there an obvious trend? Well, look at the momentum on these bars. You don't have to be chartist of the year to recognize that there is some seriously bullish momentum going on here. So that tells me that we're probably going to be safer buying than selling. It's not to say we won't see a retracement. Rather, as I said, we're probably going to be safer trying to stay on the long side. Yes, Scott asks, so a rule of three is only after a run. It is only counter trend. Yes, sir, it is. A rule of three in the Eagle is only a counter trend signal. Let's see if I can find you one. Oh, that's okay. When the market looks like this, there are rule of three signals here, and one of them will eventually work out, namely the one that was bullish. But when you're looking at your chart and it looks like this, recognize that this is a trendless market. So whatever signals you're looking to find are very likely not going to be valid because the market has no trend to it. Oh, see what I mean about the huge uptrend? I'm trying to find a bullish rule of three here, but the market is just too strong. I may have to actually consult another market to find you one, but you get the idea. As I said, this is a rule of three. It is valid, but because it's counter trend, you need to be just a little extra careful. All right, well, we're holding our own for the time being. If we can ride out this little swing that's forming, there's a good chance the market's going to give her one more push, trying to get through that high in the morning, and then we can go for a little bit of a ride. The break-even stops have been engaged, so we're at break-even plus one tick. And we're struggling a little bit here on the high. And they might just need a little bit of a nudge. We'll just give them a little bit of a push with the mouse. Get up there. Uh-oh. Don't tag me just yet. All right. Well, still a good way to start the year. A nice little trade. And now we're just watching and waiting. Wow, way to go, Keith. Keith killing it this morning. He's already posted a 4-figure morning. Were you trading pre-market, Keith? Because except for that little run up, it's been a little bit slack. You must have gone in with some serious size, but good job. Ah, I see. Keith says no, but he said he took that eagle trade with a bit of size and rallied up to his profit objective. Oh, I see. Keith says he just added the DTS system over the Christmas break. Nicely done. All right, we're getting a late filter, possible late filter entry signal here on the Falcon. Okay, the signal is complete now. The late filter entry signal occurs when the filter goes out of sync, comes back into sync. The trend line itself never changes color. This does tend to be a continuation signal, although sometimes it will happen early in a trend as well. So there's a buy signal on your Falcon. And you can see here the Raptor also coming through with a hard edge buy signal. So things looking a little bit bullish still for the NASDAQ as they take another stab at the highs. All right, the buyers got their hands full because there's obvious selling here at the 66.73 half area. That's the high of the morning. There was obvious selling here at 66.72 half. And there is obvious selling here at around the 66.75 area. So if the buyers happen to tap, say 66.74, you're going to start to see a few sellers scrambling for their exit button. they're thinking about it. One thing you want to keep a lookout for as well is when the market starts trading over the same ranges. If we were looking at, say, a 15-minute chart, this would probably look very much like a doji bar. Doji bars are quite neutral. So let's take a look here. Okay, not quite a doji bar, but if we go down a time frame or two, there we go. There's that doji bar, which shows the neutrality that we've been seeing. Come on, get up there. I'm gonna tweak my break even to the high. So if that bar gets above the high, then we'll snap that trade to break even. Maybe I'll take it to break. Oh, can't now. I was going to say maybe I'll take it to break even anyway. All right, we'll take it to break even. If they go, they go. If they don't, well, they can tag me out. All right. It's always a little tricky here at the high. I was expecting a little bit more follow through. You know, as we engage the sellers here, engage them here, and then again at the overnight high, I was looking for the buyers to pop higher. What do I mean by that? Well, very often when you have an area where the sellers are reinforced, it can be the buyers as well, by the way, in a downtrend. But here we can see this is practically identical to what we're looking at now with the NASDAQ. We have obvious selling here, we have obvious selling here, obvious selling here. The buyers are controlling the market because we're seeing higher swing lows. So the buyers make a break for it. They take out the sellers here. And you have to remember, when the traders that are selling at these points, they're very likely selling on limit orders or market orders. Their stops probably aren't all that far away. Their stops are probably right here. Or at the very least, they're up here somewhere. Certainly these guys, their stops are around here somewhere. So what happens when the market starts to tick higher? Well, you can see from the tail on this bar that there was more aggressive selling going on, but then it goes up. More aggressive selling again because of the highs here, but it goes up. Why is it going up? Because it's engaging all these exit orders, and these exit orders are actually buy orders, right? If you were a seller, you get out of your trade by buying it back. Well, when you finally got the last of the sellers and you're starting to engage their exit orders, look at what happens to the marketplace. You get this quick little pop up, and that's what I was looking for as the NASDAQ came back and challenged the morning highs as well as the overnight highs. But so far, no pop up. So far, the sellers have been digging in, selling the market back. So we are back on the bench. Here the Raptor now coming through with a counter trend signal. If you wanted, this is a doable trade. The target is the hard edge of the trading band. And, you know, it's counter trend. It's probably not the highest probability signal. I certainly wouldn't go in with 2 contracts, maybe dial that down a bit. As I said, you have a chance at a second push entry. So the signal has engaged. We see where the market is reacting. So there's the possibility of a little move to the short side as the market searches for some direction. Maybe it's just going to develop into a broader trading range. That's entirely possible as well. The hawk, a lot of yellow bar clusters here. That's showing us a sideways market. The falcon also starting to turn over, and the eagle also struggling a little bit here. So yeah, maybe this counter trend signal will see a little bit of follow through to it. So the only good thing about a counter trend trade is the risk amount and where you place your stop. It's very obvious where your stop needs to go, namely above the current highs. As such, the risk amount tends to be a little bit less. The probabilities, however, also tend to be less. Because it is counter trend. The Geiger counter keeps flip-flopping here. We're getting the Geiger counter holding now to the buy side. A minute ago it was holding here to the short side. Just kind of reinforcing the lackluster nature of the marketplace right now. If we get below 67 here, 66, 67, that might start to entice a few sellers. There's 67, come on. Oh, there it is. Okay. So we're probably going to drift at least to the hard edge and maybe even retest the low of the morning. Getting stuck a little bit there on the median line, but I think we should drift just a little bit lower still. So the buyers trying to rally the market one more time, holding on to their trend. All right, did you see how the market had a little giddy up there? That's because we engaged the exit orders of these buyers right here and here. So the buyers that bought here initially, they added a few more contracts. Things didn't work out as they planned, and then they had to exit their position. Now we're getting some of the stragglers who are running a slightly deeper stop, and not too much difficulty finding our profit objective there. It looks like actually the market may slip a little bit lower still, but that's okay. I'm all right with what the profit I have. No point in getting greedy. We're getting a few mixed signals now. The hawk with the late first micro-macro cross should have occurred up here, but the yellow bars spoiled it. The falcon, having turned over, produced a trend change signal right there. The eagle, a little bit of a mess. Overall, it's still bullish, but it's starting to me anyways, it's starting to look like, I don't know, are we entering a sideways trading range? We're just kind of in limbo. Not much to do, but wait. buyers are going to push back somewhere through here. We're kind of in the middle of a battleground, if you will, where the market is really quite neutral. Again, we're retracing the same kind of numbers. Visually, it's starting to look like a sideways trading range. I don't think we can really call a trend in this one. Okay, the hawk now back into yellow bars. The Falcon filter starting to change over, and here on the Raptor, we're getting an early signal. Now, this is one of these, what we might call an advanced signal, in that it's open to interpretation. And by that, I mean you could read this to be a hard edge bounce. It's not going to print the number 3 signal, because as far as the programming parameters go, it isn't. Why? Well, because your clouds are intermingled here and the market has drifted well past the hard edge. But in reality, it is still a hard edge bounce. The market, whenever the market encounters the hard edge of the trading band, you should anticipate a reaction. Let's see if we're getting something here on the Eagle. Yes, we are. On the Eagle as well, we've produced a red bar buy, which is a very bullish signal. So you can do the same thing here on your Raptor. Like I said, if you're just looking to stick with the high probability signals, that's fine. That's what they're there for. They're there to prompt you. But this, as I said, you could interpret as a hard edge bounce, because the market has encountered the hard edge. And as such, we would be looking for a little bit of follow through. Hopefully, we will at least get back here to the highs of the morning. That's what I'm hoping. Things a little indecisive at the moment. Good news is the stops are probably in the right place here below the low of the morning. So if the market decides to bounce around a little bit, we're probably in a good place. Come on. We're so close to the break even. All right, we're at break even. Come on, just a little bit more. Oh, don't you dare stall there. Well, obviously there's some reluctance as we get closer to 66.75. I thought we would have been just a hop and a skip to 6,700, but maybe not. Maybe I was overly ambitious. Come on, one more push. You can do it. This one might run out, by the way. It may have a little bit more room to it. It looks as though we're going to try to challenge the highs of the morning. You can see the Raptor now producing a cloud crossover signal. That's the number one signal as the clouds come back into sync. This would be one of your high probability signals, of course. Given the sideways nature of the market and that we're trading near the highs of the morning, if you're going to take this type of trade, I wouldn't go in heavy. I might risk a single contract. Unfortunately, your stops really should be back here, your initial stop. In essence, you're bracketing the trading range. So if that's the case and you can't afford it, you may choose to hold out for a pullback, a hard edge bounce perhaps, or even just a follow-up signal. But thank goodness they did get high enough to engage my profit order. And now we'll see whether or not there is any follow through from there or whether they're just going to continue moving sideways. But overall, I have to say it's been a nice start to the new year. All right, let's see what happens as they push at the high of the morning, whether we're going to engage some of these exit orders that I was telling you about. We'll see whether we get a quick move through the top of that. If it is a quick move, then you can be fairly certain the market's going to continue trending higher. If it's another sluggish breakout, then we're probably going to be moving in a sideways range. All right, here they go. Aha. Well, a little bit of a pop. Sellers pushing back now. You can see how they stalled. Well, not much bullish follow through, not yet anyway. Well, let's see now. I'm not sure that they've reached their profit objective. Not quite. If you're running an auto break even, it takes a lot of pressure off because your trade would be at break even at the moment. And certainly it looks like 66.79, a real obstacle. Look at that. We got a couple, three hits at 66.79 without any follow through. Makes me think that if they got above there, it would help push the market higher still. So you would have, your number one signal now would have found its profit objective. Hooray. Still not the bullish follow through that I would have anticipated. Look at that selling spike. Okay, now we're getting a little bit of momentum. That's a little better. Normally, like I say, when you start engaging, when you breach a significant level of resistance or support, the market has a little giddy up to it. Scott's calling a top at 66.81 quarter. That's pretty ambitious, Scott. We'll see. Well, we had a couple other signals kind of dribble in here. A first micro-macro cross on the Hawk. Another trend change signal here on the Falcon. Nice follow through on that red bar buy signal on the Eagle. Oh, I see. Scott says that's the current top. Is that from the overnight? Oh, I'm not quite sure where you grabbed that number from. Maybe from the daily. At any rate, Frank says I would like to see 66.87 3/4. Frank's following pivot points, and he says that's where the R2 pivot is. The support and resistance we calling it a little bit higher at 66.90. Well, we're stuck again, dragging our feet through 66.80. Can't believe how much the markets have changed this last year. How sluggish everything has become, how slow. Just watching and waiting. We may not see another viable signal for the remainder of our session. Because ideally I would like to be on the lookout for a pullback of sorts, maybe a macro pullback here on the Hawk. A hard edge bounce on the Raptor would be nice. Now that we are trying to get outside of this trading range, there should be a retest of the breakout. Oops, wrong tool. And a sign that the breakout is going to stick. So until we get this pullback and reaction to confirm that the breakout is going to hold, it's a little bit of a crapshoot. And this reaction, it could be quite drawn out. It doesn't necessarily need to develop over the next few bars, although it very often does. It could be drawn out. It could take an hour, half hour, longer. But that's starting to look like what we're in for, a little bit of a retest. And then perhaps another opportunity to see whether the buyers really have the market under control. Scott's asking, could the sluggishness be people just leaving money in, not in and out, just leaving it long because the markets are so up? No, it's just sluggish because nobody's buying, or not as many buyers. Well, or as many sellers for that matter. Volatility increases when there's more active buying and selling. Right now, yeah, I suppose in a way you're right, Scott, that people are just buying and holding. There's no real reason to short the market. It doesn't seem like there's any real reason to buy it as well. I think the bears are waiting on, some sort of bearish news, a world event. I'm just checking the reports calendar here to see if anything is on the horizon reports-wise. Nothing too instrumental today. Tomorrow, no. Yeah, this week looks pretty soft report-wise, which is probably part of the reason the market's a little bit quiet as well. It's always the challenge, though, isn't it? And the news will always fit what the market is doing, not vice versa. The market does not fit the news will fit the market. Prashant, saving us with a question here, writes, hey Eric, can you kindly show me the break-even setup in the Trade Manager once again, please? Sure. All right, so you're going to go to your strategies window. You can right-click to get there, or you can use the strategy shortcut in the menu. If your Trade Manager is already on, as mine is, you first need to disable it. Click Apply, and now it is turned off. Now you can make changes to your Trade Manager. Your break-even value is the second category from the top. Auto break-even parameters. If your auto break-even is not on, this will say false. So first thing you need to do is turn your auto break-even on, select true, and then you want to set your break-even trigger and your break-even offset. The break-even trigger is really a subjective value. People always asking me, what's the best break-even value? I like to think that if I get 75% of the way to a profit target, 75, 80%, that's probably as good a time as any to bring the stop to break even. You might be more demanding. You might want to see the market get up to 90%, or maybe you're more aggressive. Maybe you're okay getting to break even if the market's only halfway's there. In the case of the Falcon here, I'm running a 20 tick profit target. So about 75% of that would be 15 ticks. The break-even offset is how many ticks do you want to save. So you can set it at 0, in which case you're not going to protect any open profit. By default, it is set at 1 tick. You can also set it at a negative value. A lot of people don't know that. Once you have all that done, you can roll down here to your templates, your template manager. If you like, you can save your template so you don't always need to make these changes. Just type in a name, whatever you want to call it. I've already saved it as Falcon, but you can call it whatever. Just type it in, hit your enter button, and then you will have a template there for the next time you need it. Remember to turn your Trade Manager back on. Here at the Enable tab, click True, and remember to apply it. And now you will have your auto break even once you set up a trade. The auto break even is one of those values, though, that once the trade goes live, you can adjust it manually. You can also grab it and you can bring it in tighter or move it away or delete it entirely. But that's how you set it up. Keith is asking, Eric, did I hear you mention earlier that the red bar buy in the eagle tends to be a good signal? When watching the videos, you and Ray both said that it's preferable everything is in sync on that bird. Well, let's review some of the eagle signals here. As a rule of thumb, the in-sync signals tend to be the easy, well, they're the easiest to spot, to be sure. But the red bar buy is a very strong signal on the eagle. The big deal with the eagle is the trading band, right? This band gives us our directional bias. No, it is not an Ichimoku cloud. Yes, I know it looks like one, but it's not. But in a way, it acts in a similar fashion to an Ichimoku cloud in that it tends to offer support or resistance to the market. What a red bar buy shows you, and by the way, a red bar buy is a continuation signal. So once again, if your chart looks like this, there is no trend to continue. You can see you have plenty of red bar buy signals and their counterpart, the green bar sell, but you know, they're all over the place. Why? Well, because there's no trend. So bear in mind the red bar buy is a continuation signal. What happens when the market produces a red bar buy is that you've had a market which is trending, and all of a sudden the bars start to slip. And they start slipping low enough that the programming will actually change the market bias, the bar bias, from bullish to bearish. The red bar buy is almost like the buyers are getting a kick in the pants to say, hey, wake up, the bears are going to take the market away from you if you don't do something. This always tends to happen near the hard edge. You will never see a red bar buy form away from the hard edge. Again, it's a characteristic of the eagle that when the market encounters the hard edge, we anticipate some sort of reaction. So here the market comes down, encounters the hard edge, the buyers get the kick in the pants, and all of a sudden they start buying the market up again, almost out of desperation, and we produce a buy signal, but the bars are red. That is the red bar buy. And it does tend to have some pretty decent follow through to it. And here, of course, is the second one, and that also having a little bit of follow through to it. The counterpart to the red bar buy is the green bar sell, and it would be a continuation signal in a downtrending market. So here's a market that has a little bit of a downtrend. Here's a green bar with a sell signal. That is a green bar sell. Again, it occurs at the hard edge. It's okay that the market blows past the hard edge a little bit. Sometimes it will occur right on the hard edge, as it did here. This one never engaged. But sometimes it will go past the hard edge. Just bear in mind, when you hit the hard edge, you're going to look for something to happen. The market's going to do something. The red bar buy signal may not have been in the in the books at the time those videos were done. Some of these signals evolved, if you will, with the using of the system. Some with the direct participation of DTS owners. Frank's asking on January 1 and January 3rd in 2018, the market was very long. I was thinking it might be due to retirement accounts buying as well as institutions setting up for taxes. Yeah, it could be. Like I said, the news always fits what the market is doing. If you were a financial news reporter, you would look at what the market did, and then you would search the news for a reason the market did what it did, right? As a news reporter, you're always working in hindsight. You witness the effect, now you go try to figure out what the cause was. Whether the cause you report is the actual cause, that's open to debate. But news people will die trying to put a reason to whatever the market is doing. At the end of the day, the market goes up because there were more buyers than there were sellers. The market goes down because there was more selling and not enough buying. The reason's really irrelevant. Sometimes the reasons will smack you right in the forehead. War, 9/11, those were all big reasons to see the stock market take a tumble. Financial mismanagement, as with the Great Depression. So I don't think it's so important to actually, while it's interesting, I don't think it's that important to actually know why. If you're trading a physical commodity like gold or oil or soybeans, okay, well then you may need to keep your pulse on the weather forecast. If you're trading soybeans, you need to follow how many plantings there are, whether the South American harvest was good or bad. But even then, a lot of times the charts will show you that, even though you're not following the news. But, over the years, I've driven myself bonkers trying to second guess why the market is doing something. And I'm sure there's people out there that are great at trading the fundamental information. They are a lot smarter than I am, however. I can't keep up with those guys and girls. Not selling the lady short. There's some pretty smart lady traders out there. All right, well, we did get a hard edge bounce here, and it's kind of at the top end of the trading range, so it's looking like we're getting a little bit of bullish support in the market, maybe short term. It's not really the nicest looking move. Very, very sideways. Sideways with an upward slant. I heard one market commentator slash comedian say that the sole purpose of the stock market was to alleviate as many people of their money as possible. So if you take a look at it from that perspective, then that's all the news you need to know. Another trading friend of mine always used to say, the big money is on the surprise side. And that's kind of a good rule of thumb to follow. All right, gang, we're closing in on the top of the hour. We're going to button up shop here shortly. If you have any questions, please ask away. Otherwise, we're going to call it a day. We are seeing another test of the extreme here on the Raptors, so we could come back with a number 2 signal. That could be saleable back into this trading range. Again, I wouldn't get overly aggressive, but it is resembling a little bit of a double top. All right, no questions? Okay, well, we'll do this all again tomorrow. I will, before we go, take a look at the trade forecaster here. We are in full-on scout mode for over an hour and a half. So be careful. The market very likely to remain kind of stagnant and choppy. Talk to you tomorrow. Bye for now.